All right, everyone, welcome to the channel. I'm going to do a technical analysis on NASDAQ trading the Asian session in real time. So it's already past the macro, the time frame in which we look for the buy side and sell side liquidity. So let me go ahead and just remove this indicator. That way it doesn't confuse anyone for now. And then I'll go over the indicators once I go over the time frames. So first of all, when trading the Asian session, the market opens around 6 p.m., which is 5 p.m. here in Texas. You have to make sure that you have your time frame, your time zone, at UTC -4 in New York to align with time with New York Stock Exchange when it opens. So if it's not in those correct settings, then obviously you're not going to be aligned with anything else. So you have to make sure that you are aligned with that with that time zone. Excuse me. Next, once you have all those settings correct, then we're going to look into the strategy itself, and I will break it down and how I do this. So first of all, you have your charts open, right? All of these tools that you have in place, like these lines, you have Fibonacci tools, extension tools, forecasting tools, rectangles, all these type of shapes in order for you to come up with your own like analysis and so on. A lot of people use these tools. For this example here, all you need is lines, just kind of like give you, an idea of what you're looking for, and you're basically painting a picture. I'm not trying to get too deep into the whole technical side and terminology, but I just want to get straight into the most simplistic thing, and that is the structure and what I look for. So now 6 p.m. and then 7 p.m. time frame, between 6 and 7, we're going to look for the highest point and then the lowest point that forms within these two times, within this hour. So as you can see here, price open 6 p.m., formed the high. Hopefully you can see that. So it formed that high, and then it formed the lowest low. So next would be to wait. We're going to mark it with a line. This will be your buy side liquidity, and this will be your sell side liquidity. So once we have that in place, and the minute that it turns into 7 p.m., we're going to wait for price to either take out the buy side or the sell side liquidity. All right. Why? So why are we waiting for price to take it out? Because that will determine in the direction that we will be trading. So again, remember, we wait for a raid or sweep, whatever you want to call it, a sweep of liquidity to take out either liquidity, and then the goal is to target the opposing liquidity. So here in this live example, price swept the sell side liquidity. In 1 second, I'm trying to do something really quick. All right, so we're gonna wait for price to take out either the buy side or sell side. Whatever happens here, in this example here, sorry, I was distracted by something else, but we swept the liquidity. Now we are waiting for, we're anticipating a move higher. So in this case, I'm going to go in for the buy, select buy. You can see price is already moving in that direction. And our goal is for price to target the opposing liquidity. Let me enter buy. Okay, I will go into more detail on entries. Okay, so we wait for price to give us those confirmations. Obviously, there's indicators that you can use to help you pinpoint the best entry point and more precise. You know, sometimes you may get it wrong on the first attempt, but after the second, maybe third attempt, with proper risk management, then you can profit from this trade. So I like to use this indicator. This is the VWAP, and it's a very known indicator. A lot of the futures traders, stock traders, they like to use this VWAP, and all it is a trend indicator. So again, if price opens above the VWAP, that confirms longs. If it's below, that is a sell. So even though price is below, I'm not going to go in for a sell. Why? Because the strategy for Asia is as soon as we sweep the low or the high, we target the opposing. So since this sell side was swept, now we're going to wait to look for buys. So even though we're below the VWAP, I'm not looking to sell. I'm looking to go in for a buy. Okay, let me just refresh this so you can see the entries. Okay, so looking for a buy. One thing that I notice is that whenever the price pulls away from the VWAP, also expect a reversal. So there's many ways that you can trade using the VWAP. Also, I do have these other indicators. This is the Diddy index, and I do have a list in my Discord with the indicators, but I would also display them here. So I have the VWAP indicator. You don't have to have the consolidation zones, but I mean, go ahead and use it if you want to. The RSI indicator and the Diddy index. Okay. So the Diddy index, whenever this line, crosses above, that means that price is going down. As soon as this red line crosses below, the zero line crosses, that means that price is about to go up. Okay, so that's pretty simple, pretty straightforward. And you can use these indicators, but don't rely too much on these indicators. They're just there to help you with confirmations. You know, the best confirmation is price action itself and the structure that it's forming. Okay, but I do like these indicators. I like the VWAP, the RSI, and the Diddy index. So if you apply those to your charts and practice and combine it with the strategy that I have here of the Asia session strategy, when all of those agree with each other, there's more higher probability of you winning in a trade. Obviously, you want to use proper risk management. Okay, so yeah, once already price swept, price open really aggressive to the downside. And now if we go down into the 15-second chart, you can see that there's a nice structure here. We have a low, this high, this lower low, and this short-term high was already swept aggressively to the upside with this move here, indicating a potential reversal to the upside, returning back into the VWAP. Okay, so where would I put my stop loss in this example here? Even if I do get stopped out, I will wait for another opportunity. Okay, so I would place my stop loss just below the last low. Then I hit confirm. My stop loss is already in place. And then my take profit, since I'm anticipating for price to go up, I want to move that take profit just above the VWAP because I would like to see a nice breakout, or just below the buy side liquidity, the opposing liquidity that we are targeting. Okay, so let me move it here, confirm, and let me refresh this page real quick. I don't know why it doesn't automatically, immediately display that stop loss and take profit on the charts. Okay, so there's a possibility that price may want to come down one more time before it goes up, but it's all right. We already know that price swept the sell side liquidity. It's a for sure thing that it's going to go up. So we just have to wait, be patient, and let that move unfold. So we know that we have our take profit just below the buy side liquidity, anticipating this move higher. So even if it goes past 9 p.m., because we already have a setup. We have a nice setup. So the reason why I marked 9 p.m. because if this is our stopping point, if there's no clear setup before 9 p.m., that we don't trade that day. Okay. But between 7 p.m. and 9 p.m., you look for your setup. Between 6 p.m. and 7 p.m., you just wait for liquidity to form. After 7 p.m., you wait for that liquidity that formed between 6 p.m. and 7 to get swept in order to determine the direction that you will be trading. So you'll know for sure if it's going to be a buy or if it's going to be a sell. You can profit both ways. You can profit when price is going down, or you can profit when price is going up. So this is the beauty about trading futures, is that you can profit when the market goes down or when it goes up. Okay. So now we just wait for more volatility to kick in. I already like how price is looking right now. In this first video, I'm not going to get too deep into fair value gaps and things like that. But I can tell you that price right now is looking good. But I would like for price to climb up higher and become a little more aggressive above this high that formed here. So one thing I don't want is for price to open below. I don't want it to open below this low here, because if we open below, that means that price is going to continue lower to make another lower low and then potentially reverse higher. So why this rectangle? Again, this gap, or whatever you want to call it, that formed here, this is what you call a fair value gap. This will also will act as a confirmation of the direction of the market. If price opens above the 50% of this gap from this candle, and this candle, so it has to be 3 candles, 1, 2, and 3 candles in order to classify as a fair value gap. So again, this is also a fair value gap here. There's fair value gaps everywhere, but the ones that matter are the ones where it forms a structure. So low, high, lower, low. We broke, displaced higher, returned back into the fair value gap, 50% of it, even though the bodies of the candle open below. It's still, I don't feel too good about it, but it is still a potential setup here. I like how the indicators are agreeing with the with price action right now. Yeah. Let me go back to the 1 minute time frame. Let's see if we can aggressively pump higher. Okay, now the Diddy index, it did attempt to cross below it. That would have indicated price to pump, but now it's going up, meaning that price could potentially go down one more time to form another lower low. So I have to give it some time right now for it to do its thing. Usually I don't trade Sundays. It's not the cleanest price action, but you can definitely find some good entries on Sundays, but it's not the cleanest. Just letting you know. The best times to trade is Mondays, Tuesdays, Wednesdays, and Thursdays. Fridays, I would take it easy, just because it's already the end of the week and you don't want to lose all those profits that you made throughout the week. So you want to take it easy. Right now, I'm trading the micros. It's less leverage, but then you also have the minis. So let me go back to you have the minis, which is more leverage. So 1 mini equals 10 micros. So obviously there's more profit in a trade, but there's also a lot more risk. So you have to be really careful when trading minis, and you have to know what you're doing. For these examples, obviously I want to be testing it out with micros and just taking it easy. Meantime, I'm just going to wait, let price do what it needs to do, and just wait for a nice aggressive move higher, taking out that buy side liquidity, and potentially crossing over the VWAP, opening above the VWAP, testing it, and then aggressively going into the buy side liquidity that formed in the macro. So now that price is moving, I like it. So let's see if we break that high. Let me take a look at the Diddy index. Okay, it's crossing below. We have the RSI indicator. So the RSI indicator is the relative strength index. So whenever price crosses below the 20%, that indicates that it's oversold. So potential reversal when you see something like this. Whenever price crosses above the 70, 80% of this RSI, that means that's overbought, indicating a potential reversal. So the RSI acts as a, hey, you got to take profits soon because we're going to see a reversal. So it's letting you know and warning you of a potential reversal. In this case, we're in a buy. So whenever it crosses above the 80%, and let's say we're already at the buy side liquidity here, and then the indicator is high, it's turning green, indicating, hey, we're an overbought, I would take profits right away. But again, with these indicators, I wouldn't rely too much. With time and more training, you will know when to take profits and where to take profits. but I'm having you use these indicators to help you in your first trades and learning how to trade. It'll make the job easier. So let's see. Now again, this is not my real account. I'm doing it on a demo account for these purposes. But everything that I do here, I'm also doing it on my live account. Right now on my live account, I have three micro contracts, and I'm sitting around $130 right now. Once it hits the take profit, I'll probably make around $400. So it's a pretty good trade. Just letting it brew. It's like some good coffee in the morning. Okay, so price already cracked that high that I was waiting for to get cracked. So now we could potentially see a slight retracement into one of these gaps. So I'm going to show you there's a fair value gap here. Potential reversal if price leaves this gap open, one of these gaps open, that only makes this move. I'm sorry. If it leaves it open, that only confirms an aggressive move higher. But if it retraces into it, then it's going to be a little bit more of a high resistance trade. Potentially wearing out your patience. It's going to test your patience out. But if it doesn't retest into here and then it shoots up aggressively, it's just going to keep on flying like no tomorrow. So that's what I would like to see. Just because it comes back and retests a fair value gap or another area of interest, it doesn't mean that it's not going to go your way. It's just making it a little bit more high resistance. So another thing that I did not mention, and that is let me see, new day opening gap. I don't know why this keeps on. Okay, so when the market opens at 6 p.m., there's another fair value gap that opens. That forms. And usually when that fair value gap forms, if it's a really small fair value gap, that also indicates that price is going to be high resistance. So really testing out your patience. When you see a huge fair value gap, like you see here, this rectangle, this long rectangle bluish color here. This is let me use the indicator so I can turn it on and turn it off so you can see what I'm talking about. So where's it at? See right there, that indicator that's turning on and off? Okay, that is the Asian fair value gap, the first presented fair value gap from Asia. Again, this is a huge fair value gap, indicating that it's going to be a low resistance. So as soon as it takes out this buy side or sell side, price is going to run up to the opposing liquidity real smoothly. So it's going to be a smooth trade. And then if it's a smaller fair value gap that opens, then price is going to be high resistance, taking a long time for it to make it back into the buy side or the sell side. So it's just going to make your day a lot harder, and there's going to be more manipulation involved. So if you do see that, and if you're not experienced, then I do recommend not trading that day, just to make your day a lot more easy. So as you can see, price is now starting to get animated. So as soon as these two lines cross, that confirms, the VWAP confirms that price is going to run up and take out that buy side liquidity. So now, come on. Again, remember what I said about the VWAP. The VWAP is a trend indicator confirming the trend direction of the market. So if price opens above the VWAP and this crosses, these two lines cross with each other, that only just makes it even more high probable that we're going to take out this buy side liquidity. So let's just give it some time, let it brew. Again, you have to be patient with this. Right now on my personal account, I'm up $200 for the night, which is not bad. $220 whenever price hits that take profit and the buy side liquidity. I should be around 300, maybe 400 for the night, which will be a good start to the week. And I do believe we're gonna hit that take profit. Why? Because Bitcoin was pumping. So I would like to see a similar move for Nasdaq. After last week we had a huge sell-off, so it's time for price to finally recover, to make some new higher highs, and so on. So let me just move some of my laptop just a little bit closer. Okay, let's take a look at the Diddy index to see what kind of information it's telling us. All right, so the Diddy index is way below the -20, indicating a potential strong move to the upside. We have the RSI indicator still not showing any sign of overbought or of any lines crossing with each other. So we're still in the green. Sorry. And the VWAP is 1 second. The VWAP still needs to cross. These two lines still need to cross with each other. The price is already opening above the VWAP, the yellow line, and then this other line here is also another VWAP line, just a little more delayed. But you can see how price is already starting to move, and because we open above, I would like to see an aggressive move higher before 9 p.m. After 9 p.m., if we're not even at the buy side, but we're like somewhere near it, I would just take profit immediately, because this is like, you don't have to close a trade, but if you're already in a setup, then you're good. So there you go. Price is moving aggressively to the upside. I like it. I'm up $313 on my personal account. So I would like for it to get animated right now. Just keep on pumping hard. There you go. $346 on my personal. The reason why I didn't want to trade too aggressive because Sundays they can be a little bit tricky sometimes. So I like to take it light on my personal account. Mondays, Tuesdays, Wednesday, and Thursdays, yeah, I'll go up to like 5 or 10 micros, maybe sometimes even trading a mini. All right, so I'm gonna end up closing my trade on the personal account, locking in those profits at $323, which is a really good profit for the day. I'm logging out of that account and just calling it a night. But for this trade that we have here, we're gonna wait to see how price unfolds for the next minutes or so. And what I'm gonna do is show you a few tips and tricks about risk management. So right now we're in a trade, right? So we're up about 1480, 1470. What you can do, let's say you want to end up taking some profits. You can go here, close position. You can go to partial close, and you can close about half of this position. Boom. Let me refresh the page. All right, so you can see there's only 10 now instead of 20, and the profit is already in half. So you already locked in half of that position, half of those profits. You're good. The next thing I would do, since price has already moved up significantly, and we are already trading within the Asian fair value gap, I would move my stop loss in profit, making this trade risk free. So there's no more risk right now in your trade because why? Because I have my stop loss in profit and then letting this trade run risk free. So there's no more stress, there's no more nothing, there's no more nada. So now we just have to wait and let price do what it needs to do. I mean, you have your stop loss and profit. You already took half of your position off the table. You're good. There's no more worries. All you just have to do, sit back and relax. I mean, this is all, I mean, that you really have to do in the Asian session. It's pretty straightforward. Why I recommend the Asia session, because there's less volatility, less impact from news, and it just sometimes is a lot more cleaner, smoother than trading the AM session when 9:30 stock exchange opens. So you in the morning, there's so much that can impact price, like fundamental news, Donald Trump saying something on Twitter, so many things that can impact price. And at night, Asia, you know, after the aftermath, after everything that has happened in the day, you can already kind of like pinpoint and form a strategy around what's happening or what happened throughout the day. You can kind of get an idea on how you're going to approach the market that night without being clueless and trying to figure out what's going to happen in the Middle East or things like that. So, you know, sometimes I I just want to stick to Asia. I do like to trade Asia markets, but what I don't like about it is that, well, I come home and I got to get to either cooking or spending time with the family. So I would much rather do that than be on the charts. So I can't do it every day. I'll do it every once in a while, like on a Monday or on a Wednesday or on a Thursday, whatever. It all depends on when there's time and when I'm free. So it all depends. That's why I like to trade the New York Stock Exchange Open, the AM session, and the PM session of New York, because, well, it just aligns with my time. But if I don't find any opportunities, then obviously I will go into the Asia session, just because it's a little more chill, more laid back, and I can easily make some profits in Asia. And after you're done trading the New York AM session, you don't want to wear yourself out going into the Asia market and just doing that, just because trading is not easy, and it does stress you out sometimes, especially in the AM session because of the volatility and everything that happens in the morning. But it's just more convenient with your time because you just want to come home, chill, relax, things like that. So the great thing about trading is that, like, you can trade and have a job, right? Having a job or a second source of income can make trading more fun, less stressful, because you don't have that much pressure. And having a job while you are building your cushion, while you're building a savings, makes trading more fun, and easier for you to learn, because when you just go full in into trading, not having a cushion, not having a good savings account, then you have all the pressure with bills and, oh, I got to get this money because if I don't, then I won't be able to pay my mortgage or whatever, my light bill. But having a job is just like consistent money, easy money, and having a job is just, again, it just makes trading a lot smoother and better for you. Um, use your job to get where you want to be if you want to become a trader in the future, right? And then once you got that bag ready, once you got the savings all racked up, then you can go full-time trading, because you don't have to worry about, oh, I don't have enough in the savings account, because the markets, there's going to be days that it's going to suck. You may lose a trade, you may not even find a trading opportunity. So it cycles. It's going to be good days and bad days. But if you're able to lock in more good days and bad days, then that's going to be great. So again, it's the market keeps on going. You're able to profit, but having a good savings and good amount of money saved up before you go full-time trading is the ideal thing to do. That's what I recommend. And that's what I'm doing right now. I'm trying to save up as much as I can so I can have enough for at least 3 years, just in case the markets decided to go crazy, or what if there's another COVID or anything like that unexpected. You want to have enough money to be stress free, and that's what I'm trying to do right now. So I feel like maybe, just maybe, next year, and that'll be it for me at the corporate world. So the 9 to 5, well, 9 to 5s are good because they're like a stepping stone to help you get where you want to get. Once you build the second source of income, then it just makes things easier. All right, not to get too distracted and to jump to something else, but let's see. We are approaching 9 p.m. here in Texas. We're at 8 p.m., almost 8 p.m., 2 minutes to 8. So as you can see, price is getting close to the end of the macro, the Asian session macro. So we're already in the trade, so we don't even have to close the trade. But again, if there's no setup that formed before 9 p.m., then I would not even bother entering a trade. Why? Because it's not there. You have to stick to the rules and not deviate from them. Because if you deviate, then obviously you're going to make mistakes along the way. So hopefully I see a nice push to the upside just to kind of like finalize this trade. If not, then it's all right. But there's a possibility that price is going to retrace back into this fair value gap, maybe touching the VWAP, retesting the VWAP before we see that move higher. So I'm going to delete this line here. That way we can see how these candles form. So again, remember, just a quick recap of how to trade the Asia and the important times that we need to mark on the charts. So that is the 6 p.m. and 7. So between 6 and 7, we wait for price to form liquidity. So it's going to form the highest point, we'll mark it, and then it's going to form the lowest point, we'll mark that. After 7, we have to wait for price to sweep the buy side or the sell side. Once sweeping either sell side, we target the opposing liquidity. Again, here we strap the sell side. We wait for price to give us an opportunity to enter the market. Pull the way from the VWAP, indicating a reversal. When you see something, an aggressive move up like this is a displacement. This is a confirmation that price is potentially going to move higher. So once you see an aggressive big candle like this, okay, you got to get ready. Get ready. And if you drop into the 15-second chart, you can see a nice structure. You see a low, a high, short-term high, the low, displacement, retrace back into the midpoint of the fair value gap from this big candle. This would be the ideal entry the optimal entry, and then targeting the opposing liquidity. But if you want to be a little more conservative, you can wait for price to open above the VWAP, put your stop loss below the VWAP, and then just let it run, targeting the opposing liquidity. But once you get more experience, more time on the charts, you will be able to enter a trade or either at the optimal entry point or just a little bit below the displacement break. So again, it's going to take some time for you to get this down and to get a feel of the market. And then again, at 9 p.m., we stop. We don't trade if there's no setups. But if you're already in a trade, you just let it sit. The max you want to let it sit is until like 9:30. It all depends on how much time you want to be on the charts, But if, let's say, you're already satisfied with your profits you made that day, you're locking in some good, decent profits, you might as well just close it. You're done. You don't have to wait for it to come and hit the buy side. Don't get too greedy. Do not get too greedy. If I want to, I can just close it here and that's it, But I want to see what happens. This is for learning purposes. I want to see what happens. What I can do is I can lock in more profits. Let's close this position. Let's lock in, close 8 micros. Let me refresh the page. And now we only have 2 micro contracts running. And what I'm going to do is I'm going to move my stop a little bit higher so I can lock in more profits. Confirm, refresh the page. And now my stop is just below the VWAP. And now we just wait. If price is going to hit this buy side liquidity, then it's going to hit it. Let's look at the indicators real quick. Okay, now the Diddy index is pulling up. It's going up into the the zero line crossing. There's going to be a potential reversal if price crosses above this blue line. And then the RSI still haven't given us any signal that is overbought. So maybe, just maybe, before this line crosses into the zero line crossing, we may see an aggressive move higher, taking out this buy side. Just maybe. Let's see. Let's look how price looks here. It's still printing very small candles, nothing too animated, and it's starting to consolidate. So this price is kind of ranging in a sideways. So there has to be a breakout here soon. Now price is above the midpoint of the Asian fair value gap. We have the lower quadrant of the gap, the middle, and then the top quadrant, where price is now opening above the middle quadrant of the fair value gap. So now I would like to see a push higher, just sweeping that high soon. If not, then it's going to retest this VWAP and then sweep it before we see a reversal. So for the sakes of this video, I'm just going to let it do its thing and just see what happens. But I'm going to do this for the next 30 days. Just showcasing the Asian session strategy and why I recommend it, because obviously while at work you can't really trade. I mean, yeah, you can trade, but if you're new, I just much rather have you guys just trade the Asia, just because you have more time to really analyze the data, to see what's happening and how these candles are forming. You have more time. You're more relaxed, and being less experienced, it'll be better for you. It's slower. It's slower markets. There's less fundamental news going on at nights. So if you can, if you can't, then it's fine. The market's open on Sundays at 6 p.m. and there's no Asia session for Fridays. So Sunday, Monday, Tuesday, Wednesday, and Thursdays at 6 p.m. From 5 p.m. from 5 to 8. That is the macro, the time frames that you want to be trading in. So if you're able to test it out, go into the charts and start plugging this information in there. Start plugging these indicators, testing it out, forward testing it. If you have any questions, obviously you can always message me and I can answer those questions. I can guide you on how to use this platform. If you haven't downloaded the platform, just download tradingview.com. Sign up. The membership fee is in order for you to have all these indicators, obviously, I think is around $50 or $60. I'm not sure. Let me double check real quick. Okay. I think it's here. Subscriptions. Yeah, it's the one I have, it's $63. But there is other plans. There are then I also have the real-time market data. I'm paying $10. And then the CME Group E-mini included data. It's another $8. So I'm paying $63.73, about $80 just to use this software. But you don't have to have all of this, obviously. There's other subscriptions that offer less indicators on the charts. You just have to pick the best ones that make sense. But you should be, I think the max indicators for the cheaper subscription is around $10 a month, and it would only allow you to have about 3 or 4 indicators. But the ones I recommend is the VWAP and the RSI and the Diddy index. But if you have 4, that would be great, because you can now apply that indicator, the Asian fair value gap indicator. But can't remember the prices for the subscriptions. But check them out definitely. If you're gonna be trading, you gotta have this platform. If not, you can't even trade. But anyways, yeah. So now price is starting to move a little bit, not a whole lot. Let me refresh this page. I don't know why it's acting up. Okay, right now the trade is up at $261. So as you can see, price was actually pretty smooth. Remember what I said about the Asian fair value gap? If if price forms a significantly big gap, that means that price is gonna be low resistance. It's gonna be pretty smooth. It's not gonna be too crazy. But if the gap is really small, then that's indicating that the market conditions not gonna be the best. So try to avoid those days if you're not experienced, and that way you can prevent any big losses because you can get pretty frustrated trading those high resistance days. Maybe your entry is not going to be as precise, and then it's going to take you out, it's going to take you out, and then finally the market is going to reverse where and go to the take profit that you were anticipating, and it's going to piss you off and everything. But avoid those days. I'm telling you because I know I've been through it, and this is something that I discovered. I'm pretty sure someone talks about it, but I'm not sure. But I discovered that whenever the gap is a large gap, that means low resistance. When there's a small one, that means high resistance. It's something that I had to learn the bad way, just because I took took a few losses, and yeah, it was not the best, but you learn from your mistakes. So I've been studying this and training for about 2 years. Training. So since 2023, I've been studying and learning from my mentor. Finally, 2025 is a year that I've been really applying these rules to the charts and to my trading. And it's when I started to see more consistent profits. So yeah, it was a pretty long journey. I mean, even though I started in 2017, that's whenever I first got into investing, not trading, because investing and trading are two different things. Investing is more long term, and day trading is more short term. Trading like this, so you in, you're out. I started investing in 2017. I got into crypto. Crypto, not knowing how to trade or anything like that. I went on Google. I learned about, I started to learn about how to execute a trade, watching videos, learning more about the crypto space, invested into XRP under 1 penny. I made some really good money off of because price went up to $3. And then I experienced my first ever bull market in the crypto space. I wish I would have known what I was doing, because taking profits at an all-time high would have been the best thing to do. And then not knowing and not having any experience really, you know, made me go through it through many what do you call it, emotions and things like that. I didn't know that you were supposed to take profits. I don't know. I didn't know when to take profits. I didn't know how to trade. I just knew that I was click a buy button and hope that market keeps on pumping higher and higher. There's a lot of news articles being pushed out around that time saying, "Oh, Bitcoin is taking over," blah blah blah, and the dollar is going away. Bitcoin is going to replace the dollar, which I think it will in the future, but not anytime soon. And Bitcoin started to pump like crazy, and XRP and the rest of the crypto market was also doing the same thing. But having no experience and having no guidance from a mentor really made me go through a lot of crap. I lost a lot of money. I did make a lot of money, but then I could have made a lot more money, but I lost a lot of the profits that I made. Um, and then I also experienced my first ever, first ever bear market. That was horrible. That was the worst thing ever. That's whenever the market crashed, and then it was like 2 or 3 years of freaking price just in accumulation. Which, if I would have taken all the profits from the 2018 bull run, 2017 bull run, I'm sorry, yeah, 2018 bull run, 2019 bull run, I can't remember what date it was, what year it was. But if I would have taken all the profits and then buy the bear market, buy the blood, um, I would have been in so much profits right now. So I went through a bull and a bear market. I've seen so many cycles of the market and the crypto market. So even though it sucked to experience all of that, that's a good learning experience. So yes, I'm not saying that you guys will avoid experiencing anything like that, but trading futures, I don't think you will ever face anything like that. Yes, you will face difficulties with entries and identifying these patterns on the charts, but that's going to help you become stronger, become a better trader, learning from your mistakes, learning about yourself. Because if you never really analyze yourself to say if you're a patient person, if you're not a patient person, then all of that is going to reflect in the charts. If you are an aggressive person, a greedy, a gambler, that all of that is going to reflect on the charts. So you have to make sure that you really analyze yourselves first before you start trading. Write it down. Say, okay, this is what I struggle with. This is the areas in my life that I'm struggling with. So if you're having a bad day, do not trade that day. I'm telling you, man, do not trade because that's going to affect everything. You have to be in control of all of your emotions. You have to be good. You have to be in a good mindset. You have to have a good mindset. One thing that I like to do is I like to pray. I like to pray. I like to start the day good with some good music, good feeling music. Sip sip on some coffee. Take it slow before I go into the markets. I want to be good. I don't want to be all crazy and then all frustrated and all mad. That's why I like to stay chill. If listening to classical music that helps, then that helps. If listening to a podcast calms you down, then listen to a podcast while you trade. If listening to a sermon, listen to that while you trade. You know, but you're going to discover a lot about yourself when it comes to trading. So this is one of the beauty about trading, that you come to see a lot of things about yourself that you never know about yourself. So okay, now back to trading, back to the charts. I'll just kind of finding some filler um, talk so I can make up for the silence, and I don't want to make it like a awkward video or anything like that. I just wanted to talk about something in the meantime. But yeah, back to the charts. It's already what, 9:15. Let's see. It's 8:19 here in Texas in our time zone. All right, so starting to get close to that buy side liquidity. And then again, there's all this mess for here. That's consolidation. And later on, once we are getting pretty close or middle of the trading boot camp, I will go into more in depth. Not too much in depth because I don't want to confuse you guys, because I don't want you to overdo it. I want to keep it as simple as possible. But I'll go more on the model on trading, right? Like on why the market moves. So I'll go into that around like the middle of the trading boot camp, or at the end. It all depends. But for right now, I just want you guys to learn how to use the indicators, know what to look for, when to enter. And this is why I wanted you guys to trade around this time, because you can't just trade any time of the day. The market has to be, the algo has to align with your trade setups. I'm sorry, your trade setups need to align with the algo. Sorry. Because price and time need to align with each other. That's why I keep telling everyone. Price needs to align with time. If they don't align, there's no setup. There's no trade. You're going to be jumping into some wild trades that have no reason. There's nothing behind it. It has to align with time. If it's not going to work, it's not going to work. You want to find the best time, the most high probability setup that you can, and it only works around this time that I'm showing you here. You can't just say, "Oh, I'm going to jump into a trade at 10 p.m. through 12 and hope to see if I can find a setup." It has to be within this macro. If not, it's not going to work. All right. All right, so price already tapped into our buy side liquidity. So I'm going to refresh the page, and I'm going to show you that price already tapped into it. And there it goes. That's pretty much it. And that's how it's done. And this is how the Asian Sessinn strategy works. Pretty simple, pretty straightforward. Keep it simple. That's how it goes. All right, that's it for tonight. I'll make another video for tomorrow. Same thing. We're going to use the same strategy, same rules, same everything. And I'll see you in the next one.